Good morning. Hi, everyone. Welcome to another one of our live chats. Today, we're going to be speaking with Jennifer Harper with Bridge Financial Planning about the financial impact of COVID-19 on individuals. Thanks for joining us today, Jennifer.
Well, thanks for the opportunity. It's a tough time for everybody out there, and thanks for taking the time to share some of the provisions of the CARES Act and how this might impact individuals in addition to business owners. I know a lot over the last week has been focused on the small business loan provisions, and those are very important and very time sensitive, so that's important, but I don't want a lot of the individual provisions to get lost in the mix. So thanks for the opportunity to share some of those today.
Absolutely. And we'll have the Q&A open from the beginning. Again, the focus here will be on personal finance. That's something we haven't covered too deeply. But Jennifer is equipped to answer some of the questions around the business side of things as well. So if you've got a question, go ahead and type it in there, and we'll have time for Q&A at the end. So thanks, everybody.
Well, I guess I'll share my screen, and I have a presentation. Maybe we can jump back and forth and make it a little bit more conversational. But one of the first things I just wanted to recognize is that this act is brand new. It's not something that I think anybody knows it inside and out. It's several hundred pages of documentation. So this is really informational, educational, maybe something that you can pick up and ask more questions on later. There's a lot of provisions in the Act. So just be aware, this isn't a recommendation in any way. It's just hopefully a way for us to get a little bit more information out in a timely way. I think it's really important to address how we're all feeling right now. Like anytime you're in the middle of a market cycle for any reason, it always feels most fearful when you're in the middle of it, and we're right in the middle of it. So give yourself some space to have some perspective over time. I put a letter out to our clients a week or two ago and said, this is the third once-in-a-lifetime event I've had happen in my 20-year career. So whether it was 9/11 or the crisis in 2008 or this, it does feel very difficult and hard and fearful when you're in the middle of it. But given the perspective of time, which we will have, in time, we'll have that perspective. We'll see this in a different light. So keep that in mind too. It's always just important to manage your own emotions and avoid reactive decision making. Jumping into some of the provisions, so this is probably the one that's gotten the most coverage so far, has been on the recovery rebates. So this is the one where, depending on income, every family is going to get $1,200 or $2,400 plus $500 for any child that's under 17. And that's an interesting provision. It's not 17 and under, it's actually under 17. So there are income phase outs, and I've got those listed here. So you have the phase outs beginning at $150,000 for married filing jointly, $112,500 for head of household, or $75,000 for other filers, like a single filer. And the phase outs are $5 for every $100 of additional income. So if you make over that amount, you may get a reduced amount up to the full phase out. There are some interesting provisions around this. For example, I had the question the other day for someone who had dependent children who were in college, but they had income of their own through part-time work, and they filed their own tax return, but they were listed as dependents from the parents. And the question I got was, will the parents receive the $500 rebate for the child in that scenario? And they do not, because they're 17 or over. And then the question was, well, can the children receive the rebate on their own since they're filing their own taxes? And the answer is no, they would not because they are listed as a dependent on the parent's return. So there's a lot of interesting scenarios there. This should help a lot of people. There's a lot of questions right now about how long it's going to take these rebates to get out. I know that they're working very hard to get them out quickly, but as you can probably imagine, the sheer number and size of this project is going to take a little bit of time to get it out. One of the other provisions that is going to impact a lot of people is the early IRA distribution provisions. So most of the time, if you're 59 and a half or younger, you would have an early withdrawal penalty for taking withdrawals from a qualified retirement account. So that would be 401ks, IRAs, qualified retirement accounts. And so if you're 59 and a half or younger, you would normally have that early withdrawal penalty. This is waiving that if some of the provisions apply. So you have to be eligible to take this distribution. It's not a free-for-all. And I've seen some articles come out and say, oh, everybody can take some money out of their IRA. And that's not the case. There are some eligibility requirements around it. But what this does is takes away the 10% early withdrawal penalty. It does not take away the tax due on the distribution. So if you think about how IRAs are generally set up to work, and I'm not talking about Roths right now, we're just going to talk about traditional IRAs. But if you think about it, when you put money into your employer plan or you put money into an IRA, generally speaking, most people would get a deduction for the IRA contribution, or it would be a pre-tax contribution on their payroll. So the whole deal with the IRS and IRAs is they're giving you that income deduction or pre-tax ability to contribute into the account. And the deal is you leave that money alone until retirement, at which time you can take the appreciated value out and pay tax on it at that point. So what this is doing is removing the early withdrawal penalty, but it's still taxable. So any distribution is going to still be taxable income. Now, the pros of this is you can put the money back in over a 3-year period of time. So let's say you're in a real bind this year from cash flow because of the COVID crisis. That is a legitimate reason. I'm going to go back to the reasons why you could take this out for eligibility. Yourself, your spouse, or dependent has a COVID-19 diagnosis. You experience adverse financial consequences because you've been quarantined, furloughed, laid off, or reduced work hours because of the disease. And I want to make one thing clear. Like I know there's, from a language perspective, there's a lot of differences between what they mean by quarantine and what we say with our friends, back and forth. So right now we are shelter in place. We have a shelter in place order, but unless you have been exposed to this or have been told by a medical professional that you need to be quarantined, that's a little bit of a nuance, but I think that's what this law is going to here, is that this has to be a legitimate quarantine, furlough, being laid off, reduced work hours, unable to work because of lack of childcare, or you own a business that has been closed. Those are reasons why you would be able to take this IRA distribution. So some of the pros of being able to take this is, instead of having one tax bill due in 1 year, you can spread that tax over 3 years, and you can replenish your IRA account over 3 years in the future. So let's say this year is just a terrible year from a cash flow perspective because you or a spouse have gotten COVID-19 and you're not able to work and it impacts your income, and you need to access your IRA money to make things work. That is a legitimate use. And you would have 3 years to pay taxes on it. It's
Hey,
not so,
Jennifer,
yes.
I'm sorry. I just, if I can ask you a question really quick
Sure.
that I've seen come up several times, both here and other places. A lot of these provisions require that you be that you are diagnosed, like you said, or quarantined specifically because of COVID-19, how do you prove that? Do you need an order from a doctor that you can submit to prove that you were affected?
I would have some kind of letter or some sort of documentation from an employer that your hours were changed, or some kind of um, unemployment application, or a medical professional letter that says this is, these are the dates that you were impacted. Something like that, to have that documentation would be really important. It would be good to have on hand.
Okay, thank you.
Yeah. Any other questions or anything you'd like to ask before I move on?
Not at the moment.
Okay. And I believe the chat feature is up for the webinar, so everyone's able to ask questions in the chat feature.
Yes.
Okay, so one thing I want to point out, though, is that anytime you take funds out of an IRA, it's really difficult later on to put the money back. Even with this act, it allows the replacement of the funds over 3 years, but that would require a pretty big sacrifice going forward. So really give it some consideration on what that would mean to your future retirement savings. It could kind of take away some of the benefits that you've worked hard and put away there. So I wouldn't say that this is the first place to go for funds. There's a lot of other provisions, whether it's unemployment or the rebates, or if you are a business owner, going to the Paycheck Protection Loan Program or the disaster recovery loan. There's a lot of other provisions I would go to first before looking at an IRA distribution. But this is available, and would be a good thing to consider if all other resources have been used. So the distribution is still taxable as income. So if you took $100,000 out of an IRA, that's going to add $100,000 to your taxable income, and that's that could be significant. Even if it's spread out over 3 years, that could really bump you up in terms of tax liability for a while. Another provision is around employer retirement plan loans. So first of all, not every employer retirement plan has loan provisions available, but those that do, the loan provisions have always been capped at $50,000. Now the max loan has been increased to $100,000 and 100% of the vested balance. So that's really expanding the amount of loans that are available through your employer retirement plan. The other provision is that any existing loans that are already on the books for an employer loan, so let's say you've got a loan against your 401k at work. Right now, those payments on existing loans can be deferred up to 1 year. So that might help your cash flow this year. This is something that will only impact mostly retirees, so people that are 70 and above, 70 and a half and above. So required minimum distributions, well, the other group of people that it could impact are people who have inherited IRAs from non-spouses. So let's say your dear aunt or someone that is not a spouse left you a beneficiary IRA. So you were their beneficiary and you have an inherited IRA now. These provisions would also apply to that. So there are no required minimum distributions for 2020. If you've already taken a required minimum distribution for your own IRA, then you do have the ability, if it's been within the last 60 days, to put that money back into the plan using the 60-day rollover window. That provision is not available if it is a beneficiary IRA. But this could be something that is beneficial to retirees for the same reason we just talked about a moment ago in terms of taxable income. So if you think about what's been happening in the markets lately, the markets are much lower than they were a few months ago. And we all know that it's much harder to recover a balance in an investment account when you're taking money out of it at a low valuations, because that's a lower amount of money that can grow back when things turn around. So stopping those distributions this year will allow more money to be available as things turn around later. And the other thing it will do is it will reduce the taxable income for retirees right now that would otherwise have to take the requirement of distributions. So this is a nice provision. The last time they did this was in 2009. So this is very rare. This isn't something that you see come along very often. So if you know a parent or a grandparent or someone you know that it has been taking required minimum distributions, let them know that if they have other sources that they could take from right now, this would lower their taxable income this year, as well as keep more of their investment balance intact for market turnarounds in the future. So there are also a lot of unemployment compensation benefits that have been increased. Most of the time, each state is left to have their own calculation on how unemployment benefits are calculated and paid. There are a few things that have happened. I know here in Tennessee, we've waived the waiting period to apply for unemployment. So you don't have to wait a waiting period. You don't have to prove a lot right now. Everybody knows that this is bad for a lot of people. So they've sped up the application process for unemployment. At the federal level with the CARES Act, they've also increased benefits $600 per week. So that's on top of any state benefit. So if you've lost your job in the last several weeks due to COVID-19, you will also be eligible to receive federal $600 per week payments on top of the state benefit. They're still trying to roll that out. This is kind of like the rebate issue, where this is just a gigantic project. I don't know if anyone's seen the unemployment rolls over the last couple of weeks, but it is truly a historic number of people who are applying for unemployment all at once because of this virus. So every single unemployment office across the country is backlogged. So they're trying to work through that as quickly as they possibly can, but don't be surprised if there's a delay. The additional $600 per week will continue for 4 months. So it's not forever, but the hope is that that $600 per week for 4 months would be enough to get people over the hump of this crisis and be able to get back into work or have other options available at that time. So it's not a forever benefit, but this is kind of a crisis benefit. This is one that's probably gotten a lot more attention recently, is the federal student loan provisions. So if you have been a federal student loan borrower, and I keep mentioning federal student loans because this does not apply to private loans. If you hold federal student loans, you need to contact your loan service provider and request the payments to be deferred for 6 months. So payments can be deferred to the end of September. No interest accrues. It's not like a lump sum is going to be due at the end of September. It just hits pause. If you work in a job that would give you public service credit, so the public service loan forgiveness program, these months still count toward that. So the 10 years of public service loan forgiveness program, these months, it doesn't stop that, but it hits pause on interest accumulation and it hits pause on payments through the end of September. So required payments are suspended, but voluntary payments can still be made. So if you're in a position to continue making the payments, go ahead and continue to make them. You don't have to stop. The other thing it does is involuntary debt collections on federal student loans are halted for the moment. So if you are already behind on your federal student loans, you won't be getting those calls for debt collections right now. So this is just something to keep in mind, but the really important thing to remember that you have to be proactive. You need to reach out to your loan service provider and request that the loan payments stop. It's not going to happen automatically. Now, I've got a friend that has told me that she had some student loans from a private lender. It was not a federal student loan, and she contacted them and they voluntarily waived some payments. So they are not under the obligation to do that, but they were still willing to do that given the circumstances right now. So don't be afraid to ask for loan forgiveness from a non-federal student loan provider if you need that help. Just be aware that that's not a provision of the CARES Act. So this is another provision where a lot of times, generally larger employers might offer student loan offset benefits as part of their compensation package. So through the end of 2020, employers can pay up to $5,250 for student debt purposes. It's excluded from employee income. So that's excellent. That's, $5,250 of benefits that an employee can receive without it being taxable income. So there are also provisions around the Pell Grant and subsidized federal loan relief for students leaving school. So let's say, for example, someone had to leave college and not complete a semester, and normally not completing a semester would kick you out of the ability to receive some student loan benefits because you needed to be enrolled and you needed to be taking classes. If due to COVID-19, you couldn't finish the semester, you needed to care for family members, whatever that is, periods of enrollment will not include a semester incomplete due to a qualifying emergency. So that's a nice provision that kind of keeps everything on a level playing field for people who are being impacted by this. It's not going to just kick you out of being eligible for these other benefits. We've heard from a lot of colleges and universities, that they're not coming back for the rest of the semester. Many colleges are starting to issue refunds for prorated amounts of food service or dorm room fees, that sort of thing, that are being refunded back to families that have paid for those. If that money came out of a 529 plan and you receive that money back, you can put it back into the 529 account. So just keep track of the funds, where they came from. If they're rebated back, get them back in, and that'll allow them to grow tax-free for qualified expenses again. Jeremy, do we have any other questions right now? Is there anything you feel like we should jump in and cover a little bit better?
Sure, we do have a few questions if you want to
Okay.
run through some of those really quick.
Sure.
What is the best resource to find more information about the distributions?
IRA distributions?
Yes, I believe so.
Okay. There would be a few things. One would be, your CPA, to talk through what that's going to look like on your tax returns this next year. The other would be, if you have a financial advisor, talk with your financial advisor. If you're talking about a distribution, maybe from an employer plan or an employee loan, I would encourage you to talk to your HR professional at your employer to understand what the provisions look like for your employer. This is all very new. It's all going to happen over time. It's not all going to get worked out in a week or so.
Sure.
But a lot of these provisions are provisions that we saw once before in the 2008-2009 crisis. So it's not brand new. We've seen how it works before. And most of the time what we'll see is on 2020 tax returns, there will be maybe an extra few questions that will relate to these provisions, and it will say, did you participate in this? How much did you take? How would you like to, characterize this? Do you want to spread the tax over 3 years? That sort of thing. Obviously, 2019 taxes are the tax filing date has been through July 15th. So, everybody's still worrying about 2019 taxes right now. We haven't even gotten to the point where the IRS has any kind of guidance on the documents that would be available for the 2020 taxes yet. But that'll be something to continue to keep an eye on as this progresses.
Okay. When you were talking about loan deferments, is that on 401k loans only or all loans?
It would be, so there's two loan deferments we've talked about. We've talked about federal student loan deferrals, and then we've talked about employer retirement plan loan deferrals. So under the employer loan deferrals, any existing loan payments can be deferred up to 1 year, and the amount of the loan you can take out has now been extended to be up to 100% of the vested balance. And the amount you can take out has increased from a maximum of $50,000 to $100,000 from an employer plan.
Okay, and how do you access those loan deferrals?
That would be through your employer's human resource department, or whichever department would manage the 401k or qualified loan program at your work. They would have a form to fill out that would allow you to access those loans.
Okay. Can you please cover the unemployment provisions for gig workers?
Yes. So the unemployment provisions, I didn't cover this. I'm glad that question came up. So let me jump back to that. So there was the creation of the pandemic unemployment insurance for those who don't otherwise qualify. So most of the time, to qualify for unemployment, you had to show that you were an employee. You had to show, a lot of employment history. You had to have a lot of records. With this program, it recognizes that there are a lot of self-employed people. It recognizes there are a lot of contract workers, a lot of people that don't fit into the normal unemployment buckets that might still need to have that coverage. So I would encourage you to still reach out to your state's unemployment office to qualify and apply for unemployment. Just be aware. I know from some of the folks that I've already talked to, I know people that have been furloughed close to 2 weeks ago that still haven't even gotten a PIN from the Tennessee Employment Office. So just be prepared for long waits to get that answer, but don't give up. That's definitely a benefit that's out there that wouldn't normally apply.
Okay, and that sort of leads me into the last question we have in the Q&A hopper here, from an anonymous attendee. Unemployment benefits, any information on if state of Tennessee is treating self-employed 1099 different from W-2?
I don't have any specific guidance on that right now. I know anytime I've tried to get additional answers specifically out of the Tennessee Unemployment Office, everything's just backlogged right now. I would say continue asking, continue digging in, and maybe that's a question I can follow up on as I learn more. I'll be happy to follow up with that if anyone wants to contact me with that question.
Sure. And as we've said before, we're going to keep doing these live video chats, folks, as long as all of this keeps going on. So we'll update things, and as things become clearer, we'll have more answers to give you over time. I don't doubt.
Right.
So if you want to carry on, Jennifer, and then we'll circle back again at the end and pick up any new questions that accumulate over time.
Okay, sure.
Thanks.
Okay, so I think we just finished with 529 plans. So some healthcare related provisions. So the definition of medical expenses have been expanded for health savings accounts, Archer medical savings accounts, and flexible spending accounts. So eligible expenses now include over-the-counter medications. So if you have a flexible spending account, an Archer medical savings, or a health savings account, it has been that it had to be a prescription medication to be able to purchase those with those tax advantage dollars. That's not the case anymore. So you can purchase over-the-counter medications. The other thing is eligible expenses now include menstrual care products. So if there's anyone out there that would like to purchase any of those care products with HSA, Archer Medical Savings Account, or flexible spending account dollars, you can now, and that's not been the case to this point. So that's a benefit. Other notable changes: Medicare beneficiaries can receive a no-cost COVID-19 vaccine when it's available. We don't think it's going to be available for a while, but when it is, Medicare recipients can get that at no charge. Something that is available right now is Medicare Part D recipients. So this is the drug benefit provision. They can request up to a 90-day supply of medications right now. So even medications that may have been limited to a 30-day supply can now be a 90-day supply. That's trying to keep people out of pharmacies, out, keep people home as much as possible. So you can get a longer supply of medications right now if you're on Medicare Part D. And also telehealth services are temporarily covered under HSA eligible high deductible healthcare plans. So telehealth has been a big winner in this crisis because we're trying to keep as many people out of doctors' offices as we can to reduce exposure and to keep medical professionals available for people who are being impacted by the virus. So telehealth has really come a long way in even just the last few weeks. So if there's a service or medical professional that you need to meet with, ask about the availability of telehealth services. So it could be that you can get some services provided through telehealth that in the past you might not have been eligible for. So that's a nice benefit as well. And then the last thing I've prepared for today is just to talk about don't let perfect be the enemy of good. I think a lot of times when it comes to personal financial decisions, a lot of people just get paralyzed and they don't want to make a decision. They're afraid to make a bad decision. And I think as long as you're being well informed and you have a strategy for what you want to achieve out of your personal finances, first of all, just remember, nobody gets it right all the time. One of the favorite things I like to mention is a letter that Warren Buffett wrote a while back about his, I can't recall exactly, I think it was his 15 biggest investment mistakes over his career. So he's been wildly successful. If somebody like him can write a letter and say, here are the things I've gotten wrong, give yourself a break and understand that nobody has this figured out 100%. Everybody makes mistakes from time to time. But if you need help, get it. This is one of those times where if you can address a smaller problem quicker, it will benefit you in the long term by not becoming a larger problem. There are a lot of people struggling right now. You are not alone. There are a lot of benefits that we've talked about today that are available that weren't available a month ago. So take advantage of them if there's something that you can benefit from. But keep your eye on the long-term goals and strategies for what you're trying to accomplish. And this year is going to be a setback for a lot of people, but keep your eye on the long-term goal, and we'll all get through this and be on the other side of it, and move along. So if you can, just keep that longer-term perspective in mind. And then if anybody does have any questions, Allison and I are both certified financial planners. We are available for questions, and here's our contact information. And if anybody has any questions, we're happy to answer.
Okay, thank you, Jennifer. Got a couple more questions that have showed up in here. Shout out to the Chamber's own Director of Accounting, Yolanda Hazlett, who's in here asking some very insightful questions for us.
Hi, Yolanda.
Can 1099 contractors apply for SBA loans?
Yes, they can.
Okay.
Yes. So this goes back into the small business loan provisions that are also part of the CARES Act. So there are two big loan provisions. One is the EIDL, or the disaster loan program, and then the other one is the Paycheck Protection Loan Program. So both of those have been expanded to include 1099, sole proprietors, small businesses of all kinds. So if it's a contract worker, if you're working as a 1099, you need to apply for that yourself. It's not the person that holds the contract that would apply for that for you. So be aware of that.
Okay. Where can we find more info about the FSA, HRA, HSA provision? Have merchant codes been updated for OTC and feminine products for immediate purchase?
Ooh, that is an excellent question, and I simply don't know. As far as where to go for additional information, um, I would encourage you to go to the source as much as possible. There are, a multitude of articles being written daily by any number of people, some of which are very, very good, some of which frankly aren't. So the closer you can get to the source of the information, the better. So look up, go to the irs.gov website, go to the sba.gov website, go to any source material that you can. So these provisions are all going to be updated regularly. Uh, I don't know in terms of like the product codes that are now eligible for HSA or Archer or MSA, FSA. I don't know. I don't know how quickly retailers are going to pick up on that. I know, my husband and I have an HSA account, so I have a credit card that is linked to the HSA account, and I know I can technically buy, what I need with that HSA account, but I know that only certain purchasers are going to be eligible. So just make sure you're keeping good receipts, good records, so that if anything's questioned in the future, you'd be able to say, this is what I purchased with this account, so that you would have records on what you did.
Okay. And I guess just one final question from me. You touched on this briefly earlier. Um, are How much are we expecting all of this to impact taxes next year?
Well, that's a big question. So, are you saying, tax rates, or I'm not
Um,
sure in what
let's
way?
just say, as someone who got married this year,
Hmm.
I'm already going to have more complicated taxes,
Hmm.
and then now are we going to be piling more complication on top of that, with all of the programs that went into effect this year? And I know you won't have specifics at this point.
Yeah.
I'm just asking for just sort of a general outlook.
Well, general outlook is yes, it's going to be more complicated because there's a lot more ifs, ands, what ifs, and buts today than there was a month ago. But that
Sure.
being said, most of it should be a net benefit to most taxpayers. So, for example, the recovery rebates should be, a benefit. The folks that can take advantage of not paying or not taking a requirement on distribution this year, that would be a net benefit. This whole act was built to be something that helps get all of our citizens, all of our workers through this crisis. So it should be a net benefit. Will it make it a little bit more complicated? Will you have a few more questions to answer? Sure. But I'm okay with that, to get some of the benefits that we're receiving out of this.
Sure, absolutely.
Yeah.
Okay. This has been some really useful information, I think. As usual, all of that contact information that Jennifer put on the screen, we'll make sure that gets added into the notes when we post the recording of this after the fact. And is that the best way for folks to get in touch with you, Jennifer, if they have further questions after the fact?
Yes, absolutely.
Okay. And as I said, we'll keep doing these. Feel free to reach out to us at the chamber anytime. And stay strong out there, folks.
Well, thank you for the opportunity. And yes, please stay safe, stay at home, do what you can. We'll get through this. Thank you.
Yes, we will. Thank you, Jennifer. Thanks, everyone.